Welcome back to the Dividend Diplomats YouTube channel. You got Bert, the Hurt, and Lanny, the one, the only, the Dividend Diplomats, guys. And we're here to talk about not one, not two, but three dividend stocks as we head into the month of December 2022. Stuff is getting crazy. Volatility is at an all-time high still, guys. But we're here to talk to you guys about dividend stocks to buy.
Before we do that, everybody, smash that subscribe button. Give this video a nice thumbs up. I've heard enough of it in the comments, everybody. I'm not wearing my Ohio State hat today. My hair looks pretty good, so I don't need to have a hat to cover it up. It's not because Ohio State lost, but for all those smack talkers out there, I just want to make one thing very known here. Ohio State's record against Michigan since 2000, I think, is 17-5. So may have won 2 in a row, but just know that. Owned you this millennium, so take it, everybody.
Shots have been fired.
But yeah, Ohio State got crushed in that game. That was awful.
Terrible game.
Yeah,
terrible showing. But I think Ohio made up for it on Sunday. Browns won, Cavs won. And yes, Cincinnati Bengals did win for anybody who's a Bengals fan.
We'll take it. We had 3 for 4 on the weekend. It's pretty good winning percentage, if you ask me.
Yeah, not too shabby. The Pistons look real solid.
Yeah. So speaking of 3 wins, we're going to talk to you about 3 stocks today that are potentially undervalued and make up Lanny's December dividend stock watch list. We're excited to talk about these because we brought up these companies up on this channel. They're in our portfolios, which, by the way, everybody, if you look down there, we link to our full dividend stock portfolio in each video. We are fully transparent about the companies we own in our portfolios. We put our money where our mouth is. Check that link if you want to see all the stocks we own. So, Lanny, tell us a little bit about your thought process going into this watch list.
Of course, I love adding to current positions. I'm real tired of adding new positions. In fact, I'm trying to clean up the portfolio, and because personally in my brokerage, I got about 65 individual stocks. My wife, we did replace recently. If you haven't caught that video, we replaced Delta with Medtronic stock. But guys, the S&P 500 is still down 17.5% as of this, currently recording on November 29th, which means that the discounts are still out there, guys. And just because a stock has bounced back up maybe 5 to 10% in the last month, still more than likely will mean that they're down and they're punished. So I wanted to stick with the same stocks that are in my portfolio, stocks that show, below S&P 500, price to earnings ratio, as well as decent dividend yields and decent dividend growth rates, as well as, maybe some fighting companies here that are trying to really make a comeback, because we've got at least 2 here probably on this channel that we're about to talk about today.
So how do we look at these 3 companies? We're going to run them through our Dividend Diplomat stock screener. 3 simple metrics. 1, PE ratio less than the S&P 500. 2, payout ratio less than 60%. 3, history of increasing that dividend. And then 4th, that bonus metric, the dividend yield. Let's get excited. Get hyped up, everybody. Get the crowd moving. Let's kick it off. Let's talk about stock number 1 on your watch list.
Well, Bert, this stock here is about to build or is in current process of building a multi-billion-dollar plant here in Columbus, Ohio. We're talking Intel stock, ticker symbol INTC, definitely out of flavor amongst the dividend investing community. I currently own over 180 plus shares of Intel. So I've got this goal, everybody here can laugh, Bert. I'm sure you're like, come on, guy. But I'm trying to get to 200 shares of Intel just to have a nice round position, because the drip on that would be pretty impressive. I would really love that quarterly drip from Intel at that mark.
I'm more like, hey, take it easy, Lanny. Take it easy.
We'll get to that on the 3rd dividend stock.
Yeah, but in all seriousness, getting to nice round numbers is fun, and it's been something I've been looking at too. I hit 1,000 with SoFi. I hit 100 at Johnson & Johnson. It's just kind of fun hitting that like flat level, and then you're like, I'm good on this position. We got a nice round number. Let's let the drip take over. So I'm all for getting to 200 shares of Intel. I think that's awesome.
You hit 10,000 shares of FTT token.
I could. I could probably have $1 bill in my pocket. I can probably get to that pretty fast.
No, not funny. apologize
No,
to any
it's not funny at
of the
all.
holders right now.
Yeah, all right. Let's get to Intel. Let's start running them through the stock screener here. That first metric, the price to earnings ratio. Prices as of November 29th, 2022. 28.90 is what they closed at. 4 DPS $1.88. PE ratio 1537. Tell us about that payout ratio.
Yeah. And you know, we use the expected earnings from next year because actually using the current year expected earnings was actually a little higher. So we're trying to be as conservative as possible, using only $1.88 for next year. Yeah, that payout ratio, you know, they currently pay a 36.5-cent quarterly dividend. Annualizing that bad boy out, you're at about $1.46 per share per year. High on the payout ratio, 77.66% right now. That's the negative sign about being very conservative, as well as hopefully only the short-term pressure here on the payout ratio as they build these massive plants in Columbus, Ohio.
God, not Janie Briggs. All right, let's look at that third metric here. 5-year dividend growth rate, 6.29%. Increase that dividend for 7+ years. So solid dividend growth. They're starting that history. Let's see if they can keep it alive. Not expecting overly high dividend growth in the short term, but you never know. We'll see what 2023 brings.
Yeah, you don't really know. You know, I don't expect it to be that great right now, just based on what the forward EPS looks like. And at 7+ years is only because they had that little bit of a stall in 2013, 2014. Bert, you were right there with me when I was like, come on, Intel. And they just broke their initial streak. But hey, they started a new one and they're already back at 7+ years, which is pretty amazing and speaks to how long I've held this damn stock over here. But Bert, what's that dividend yield look like for Intel?
Not 1%, not 2%, not 3%, not 4%, 5.05%. That's right. That's why you look at Intel right now, because they are paying you to wait this one out. So at least if they're down, if at least some of the metrics are slightly worse than they were a year ago, you're getting rewarded with a 5% dividend yield for that.
You know, could this be the new norm for Intel, taking a page out of IBM's book where they're now a higher yield, lower dividend growth? We'll have to find out. We will have to find out. But, you know, again, buying shares at $28.90, not the worst spot to be in. And hey, yeah, like Bert says, you're getting paid to wait, more of a fixed income style at 5+%. So all the current people that are living off of their current passive income stream or dividend income, Intel's paying you 5%, just an FYI.
Yeah, so we'll put the chart up here while we start moving along to the next stock, summarizing all of Intel's metrics. The second company, it's a few days after Black Friday, a few days after Cyber Monday. Chances are you've seen this company on the move, and they probably have delivered many packages to your house, your neighbor's house. That's why we like this company. Stock number 2 is UPS, my favorite thing in the world, when the ticker matches the name perfectly. Ticker symbol UPS.
Yes. Guys, UPS is an awesome stock. Now, this is where they're going to be a little bit, obviously, on the complete opposite end of Intel. Whereas, you know, they're actually doing very well. Business is performing very well for UPS. In fact, that dividend increase earlier this year that we'll talk about was almost 50% this year. Don't anticipate that going forward, but all of the higher costs they've been able to pass on to the consumer, raising the rates to ship, raising the rates of all their other facilities that they're, you know, being able to provide for their consumers. So the stock is actually doing well. I was buying the stock higher than where it's trading at, lower than where it's trading at. But currently they're trading at $184.89, still down about 13% this year, which is less than the S&P 500 that's down 17.5%. But analysts are expecting 2023 earnings per share, again, which is lower than what they're currently expecting for this current year that we're in. So next year, expecting only $12.28 from UPS. On that first metric, that equates to a price to earnings ratio of still only 15.06.
Let's check out that payout ratio. Their annual dividend, $6.08, gives you a payout ratio of 49.51%. Perfect. Voila, right down the middle.
That's like a Bud Light in Bert's hand.
You mean this Bud Light here? Just was feeling it tonight, everybody. It's just one of those nights. At least it's not a natty ice kind of night. You never know when those are going to pop up.
Guys, next time, let us know in the comments if you want to see Bert drink a natty daddy throughout a recording.
A natty daddy. It's fine. Bring it, everybody.
If we get
Yeah, when we get to 20,000 subscribers, I will.
If we get to 300 likes on this video, Bert will drink a natty daddy. 300 likes. That's it. Let's go. Like this video. Natty daddy for Bert on the way.
Sure. I'll also have one at 20,000 subscribers too. I'll just have a natty daddy every single video.
We're looking for reasons now to drink the natty daddy.
Yeah, you caught me. All right. Which one did we leave off? And we talked about the payout ratio. Let's look at the 5-year dividend growth rate. 6.41%. They've increased that dividend for 12 plus. As you said, 2022 is probably an anomaly with that 50% dividend increase. In the long run, they're going to probably revert back to that high single digit dividend growth rate. But hey, it's a good sign that when the stock is crushing it at that time, management is still looking to reward shareholders above and beyond what the average dividend is. I'm really liking that.
Bert did say if they increase their dividend in 2023, he'll also drink a natty daddy to that one.
Yeah, every single dividend increase I have will have a natty daddy just being chugged.
The dividend yield on UPS right now is 3.29% based on, again, the current close price of $184.89 on November 29th. So again, we'll flash the metrics up. They're a 160 billion market cap company. Intel was 120 billion market cap. So we've got to be pretty close to that on this third dividend stock, right, Bert?
Yeah, that's right. We're going to move into what could probably be the most opposite sector of where we're going in here. We're even heading across the Atlantic Ocean here to a nice taste of Italy here. Lanny, why don't you tell us about that third company that has a nice place in your pantry, your fridge, and in your stomachs?
Exactly, in your stomachs, guys, because this market cap's only 115 million. So again, we were talking about $100 billion market cap companies. This is 115 million. So definitely small, definitely a micro stock. Armanino Foods of distinction, ticker symbol AMNF. Look them up on the OTC markets. I own quite a few shares. Almost, again, Bert's got me jealous. If there's 1,000 shares of SoFi, I've got to get to 1,000 shares of Armanino. I'm well over 800 something shares, maybe even over 900 something shares, which is weird saying that out loud.
It is.
But, they're a consumer goods company. They produce your pesto, your sauce, your pastas, your meatballs. Man, it just brings tears to my eyes of joy talking about this company here.
Did you see that article that said Armanino's meatballs pair perfectly with Natty Daddy's, Lanny?
Hey, if we get to 300 likes, I'll eat some meatballs and Bert will drink his Natty Daddy.
Yeah, you'll blend them together and shake them up in that smoothie. It's a smoothie container right there. All right, so let's talk about this small cap company. All right, let's get into the price. The price, $3.58. Forward EPS, 21.5 cents. So that gives you a PE ratio of 16.65. And Lanny, it's not the easiest PE ratio to figure out with that EPS not exactly being readily available, is it?
No. So I usually look at their earnings release and do a form of annualization. Just say, okay, I think conservatively this is where they'll be at 21.5 cents. Hopefully they blow that out of the water. But 16.65 PE ratio is not that bad, Bert. But what about that dividend payout ratio?
That annual dividend is 12 cents. That's another perfect payout ratio of 55.81%. Boom, boom. Perfect. Tell us about that history, Lanny.
Sure. So they did right size or reduce that dividend in 2020 as like a few other companies like Westrock, Shell. Still waiting, guys.
I think you got a lot more coughing you need to do if you're going to fill up this list.
So Armanino, though, is now back better than ever with their dividend. They actually used the cash proceeds instead of paying those dividends at the higher amount in 2020 to pay down debt. Great. Nice job. Clean it up. I know they're probably pretty happy right now, not borrowing at the very high interest rates right now. So 1 year of dividend growth and the average 5-year rate, even by reducing it during that period of time, is still 8.56%.
Fantastic. Their yield, 3.35%. Very, very solid right there for a nice small cap company with a perfect payout ratio. Loving it. Voila.
Voila, bon appetit. Now, so guys, their price is actually up 8.5% as well this year. So out of the three stocks, the stock actually is up. So they're actually beating the S&P 500 by 25% this year.
get yourself to those 1,000 shares, Lanny, of this company. The metrics
Go
are
get yourself some meatballs, guys. So there are three stocks here: Intel, UPS, and Armanino Foods of distinction. Out of these three, which one do you like? Which one would you buy right now? Do you see any of these three being stocks to buy as we head into December? Let us know in the comments.
If you haven't already, subscribe to this channel. Give this video a thumbs up. Kind of hoping we don't get to 300 likes on this, but you know what? I'll figure it out if we have to. You'll see a natty daddy, I guess, coming
Wait,
in.
are those the Michigan fans saying "Natty Daddy"? 300 likes, guys. Let's go.
Yeah. All right, everybody. Thanks again. Let's keep crushing it. Let's keep growing the channel, the subscriber. Let's keep talking about stocks. And most importantly, let's keep growing our passive income.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.